All right, so here we go again. And this is the Learn and Trade Forex new level strategy. As you guys already know, I'm just a swing trader, just taking swing trades out here, just holding another swing trade. So this is the same EuroUSD trade. I just decided I might as well do another video on it since this is my only active trade at the moment. We plan on taking some more trades later on this week, but we have to wait till price approaches some new levels of support and resistance. So we're going to be patient in the market, and we're going to wait until price comes to us so that we can make really good trading decisions about what we want to do in terms of trading the market. So just want to go over this trade again. As you guys can see, this is the EuroUSD. I'm looking at it from the daily time frame. Okay, now what does a daily time frame show us? It shows that price is, the major trend is upward. So price is going up, price is moving up. But we know that price never moves up in a straight line. So price has what we call these retracements or these pullbacks. So price came up here, it's pulling back here. Now, we believe that price is going to pull back into the next level of support. Why do I say support? It's because price is moving up. So it has to find support before it continues to move upward. Now, does it have to come all the way down to this support level? No, it doesn't. It does not have to come all the way down. Price may turn around and reverse right where it's at right now. But based on what we've seen in the past and the way the market and the way that we know the market moves, price is more likely that price is going to come down. This support level, find support where the buyers are willing to go back into the market and continue to buy the euro versus the USD. Now, of course, there could be some other factors that take place while trading this pair. It could be economic data. Well, let me say this. The factors that could take place could be fundamental, right? So that could be new economic data. We know that President Trump is, making moves with the tariffs. There could be war that may break out in another country. Certain things impact the financial market. So barring that nothing dramatic such as that takes place, price may just go ahead and pull back to this level right here of support. It may go through support, or it may choose to reverse and get back in line with the overall big trend. And we know that's with the market going up. Okay, so that's kind of what we call the if-then process. Once price gets to this level, if it does this, we do this. If it does that, we do that. Okay, so I hope that makes sense. So again, price came up. We started to begin to see weakness at this level here. So we anticipated that price may reverse, right? Give us a little pullback before price continues this journey to the upside. So once we seen weakness, we went ahead, or at least I went ahead and I set me a level right here of, this is the level of support right here. Now, it doesn't look like support on the daily time frame, but if I pan down to the 1 hour or the 4 hour, which I'm going to do here shortly, you'll see why I call this a level of support, because price came here, bounced off, tried to go lower here. It kind of pierced this level of support, came up, and then it came here. It actually went lower, but it didn't close. It didn't close lower than this level right here of support, right? Again, once we get to a lower time frame, you'll be able to see that better. So using other confluences that I use, I went ahead and put a sell stop order right here below this candle, so that I said if price breaks below this candle, then we'll go ahead and let it put us into a sell trade. We'll put our stop loss behind the highest high, right? And then we'll just try to get a 1-to-1. And then depending on what price does after that, if these candles begin to look really strong, really bearish, like price wants to break through here, we'll try to hold for a 2-to-1. Okay, but that's the whole premise behind this trade, right? That's essentially how I trade the Forex market, right? So I'm day trading. Well, I'm sorry, I am swing trading, not day trading. So I'm swing trading the market. So what does that mean? That means we need to rely on patience because we're swing trading, and we swing. When I say swing trading, we get our signals off the daily time frame. So let's say, for instance, we didn't catch this short right here. So price came down, gave us this sell right here. Now, maybe I would have put a sell stop order here, or put a sell stop order at below of this candle here, right? But nevertheless, this would have been a good trade. But let's say we did not catch this trade. So we were waiting on the EuroUSD to give us another trade opportunity. From here, let's say we noticed it here. We would have had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And if we noticed it earlier, let's just say about between 12 and 15 days before we got a trade set up. That's why I always say it's important that you trade a lot of pairs when you're a swing trader, taking your signals off the daily time frame. So when I say patience and waiting on price to come to you for a really good setup, that's what I mean, guys. Sometimes you have to wait days. 15 days is actually 3 trading weeks. So you would have to wait 3 weeks before you get a nice setup. So that is one of the cons when it comes to swing trading, right? You have to oftentimes, especially if you're taking your signals from the daily time frame, you're gonna have to wait until you get a nice setup. But once you get these setups, you can see that these setups, I'm not gonna say they're automatic, but they're more reliable setups in my opinion than day trading. Not to talk anything down, not to make any negative statements or try to talk down on day trading. I know day traders that make a boatload of money, but they have the time to do it. They have the personality to do it, which I think is really important. And they have, they just can see the charts a little bit differently than I can, right? I have a tendency to day trade from time to time, but it's not my strongest suit when it comes to trading. I'm a much better swing trader than it comes to day trader because it fits my personality. I like to check, double check, and then recheck again before I go into a trade. I have to feel comfortable about the trade. So for instance, I would have felt comfortable on this trade here, right? So price came down, gave me this bullish candle. It bounced right off this level right here of support. Now I noticed this wick right here. So this slight wick right here, this is just rejection right here. So it gives me the thought that, hey, price may not want to go any lower. And if I go down to a lower time frame, let me show you guys what I mean by that. When I go down to a lower time frame, let's go down to the 1 hour. I'm gonna come right back to this daily chart because I don't want to teach this from the 1 hour, but I gotta show you guys what I mean when I say certain things. Find that. Hopefully it comes up soon. All right, it must be back here somewhere. I'm gonna find it. Hold on. All right, there it is right there. What am I doing? There it is right there. Okay. So when you get down to this support level, remember, it doesn't look like the best support level from the 1 hour, but that's why when you're swing trading, you're always looking at your support and resistance levels from the higher time frame, right? Because that gives you the strongest S&P levels. I mean, S&R levels. What am I doing? S&R levels. And it makes your signals that much stronger because you are looking at where the real money is in the market. Trust me, major banks, hedge funds, things like that, they're not trading on the 1 hour time frame. Well, maybe they are. I can't confirm that, but I don't think they would be trading on a 1 hour time frame. But nevertheless, though, so this is the day that came all the way down. And price began to move around here, right? So what we could have done, so that could have gave me an indication that, hey, price may want to begin to break out it wants to reverse and go reverse to the upside, right? I already got my moving average on here. This is a level of confluence. We're not going to get into that on this video, but it's a reason why I have this moving average on here. It's a 36, by the way, I can tell you that. But once price go ahead and break this, so it broke the moving average right here and came back. So once price breaks this moving average, so this is the daily candle that gave me the signal. I'm going to remove this line here because I want to show you guys something when I go back to the daily time frame. This is the daily candle that gave me the signal right here. This is the candle that gave me the signal. This is that white candle you saw, that first bullish candle you seen. This is how it looks on the 1 hour time frame. Remember, it's 24 1 hour candles and that one daily candle. So this is how it looks. So this gave me the indication that price wants to move up. It wants to reverse, right? I'm already looking for that. All right, let's go back to the daily. All right. So this is it right here, guys. This is that white candle. But why am I already got my antennas up for a reversal? I'm already looking for it. It's not it. So what the indicators, the moving averages do, they just confirm what I'm already looking for. I'm already looking for a potential reversal. Why? Because when it came down here and bounced right off this level right here of support. Now, this is not a recent support level. This has been support for over a full year. This is the, oh, I'm looking here. Should be looking here. So this has been support for over a full year, right? It's a support level. It gives me the resistance. I mean, the support. It bounces right off here and pushes up here. Okay. So now here's my signal candle here. It get pushed all the way up, right? Gave me this big bullish candle right off this level of support. What else didn't it do? It opened up. It didn't make it back. It didn't trade lower than this low, right? So the buyers are here. You got buyers here, and it made this candle here close bullish. This is the signal. This is what I need to see. This is what I need to see. This candle has closed. So this is anytime after 5 p.m. Eastern Standard Time. I have a few options for entry here. But keep in mind, my entry still needs to confirm that I'm right. Because just because this gave you a bullish candle doesn't mean it's going to keep going up. So my entry still has to confirm that I am right in my analysis. Yes, not only do I get the signal, so let me start it from the top. Not only do I have this price coming into support, right? Coming into support, bam. I have the moving averages showing me which direction I should be trading the market. That's two reasons. I see the resistance here. I see the resistance where price bounced off. This is a daily candle. So this move, this push off is more than what it looks like on the daily. This is actually a 20 pip push off, right? It rejected 20 pips. Now I look at my signal candle, but this is after this candle closes. I'm not guessing. This is after the candle closes. After this candle closes. So what didn't this candle do? Well, it couldn't trade lower than here. That shows me buyers here, and it closed bullish. Okay, that's about 4 or 5 different confluences, right? Support, moving averages, rejection, opened up higher, couldn't trade lower. Nice bullish candle right here. It's not an engulfing candle, but it is a strong bullish candle. Okay, that's my signal. Right or wrong, that's my signal. Potential entry order right there. Break of that candle. Conservative entry order. Break of this high, right? Entry order one. Possible, more conservative 2. Aggressive, like a little bit more aggressive. I'm bought in. This is the entry order I'm bought in on. I'm bought in, but I want to make sure. I'm wait to the break of this candle, right? Because price still traded in the body of this candle. Could be. Looks good to me. Everything else is lining up. We know you're not going to win every trade. But let me show you the best entry order. Drop down to the 4 hour or the 1 hour. Trade off that moving average. Let's go to the 4 hour first. First entry order. This is the day that did it. First entry order. Yeah, we believe. Second entry order, I want to confirm. Here's the best entry order though. Now you have to be bought into this. Stop is back here. Best entry order is always going to be on this moving average. When price trades back into this moving average, hit it. 153, 153 pip stop. Your 1-to-1 was made, let's just say here. It was 2 pips short, but we know it's here, right? Your 1-to-1 was made somewhere around here, right? It took you a little over a week, a little over a week to get that. Of course, you can get a 2-to-1. We know you can get a 2-to-1, but we don't know you can get a 2-to-1 till later, so we don't count those. If you want to hold for a 2-to-1 based on where price can potentially go from the daily time, from looking at the daily time frame, you can. But we get the 1-to-1s before we get to 2-to-1s all day. That's the optimum 4-hour entry. Here's your optimum 1-hour entry. It's the same thing as the 4-hour. I'm sold. I'm bought in. I'm bought into the trade. That's my stop. Here's my best. Here's my most conservative entry. I know, but I don't know. This price. This is the entry makes me sleep well. Put that entry order here. When it comes back to that moving average, stop loss back here 124. You was in a little negative for a little while, but that's a part of trading, and then that's swing trading. Swing trading. We already know the rules about the stop. I'll do another video on it. If it doesn't, if we don't believe it's gonna break this stop, then we winning. We're still committed to that trade. But we're gonna say it took 1, 2, 3, 4, 5 days. 5 days to get it. And that's it, guys. Learn and trade. Swing trading at its best. New level, don't miss. All right, guys. Have a good day.